Hello, everybody. It's Sunday. It's Q&A time. Thank you all for coming. This one will be a spicy one today. I'm going to put myself up in the top so I can focus on you all. Thank you, TNT Tesla, K8, Sean Donnelly, all for coming. This one is a little bit interesting. We're going to be calling it Bitcoin and the Fourth Turning because there are some crazy predictions out there. Bitcoin is at 85,000 as we speak. It has shot up about $1,100 overnight, which is good considering we've been languishing quite a bit for quite a while. We try to figure out what's best. Anyway, let's get into the story and not waste any time. And sorry for being a little late yesterday and early today, but I've got family in town, so I have been a bit busy with stuff. So let's get into the story. Not financial advice. And all these good questions come from Patreon. Very first question today is, whoops, let me tilt this. Andrew MS16, welcome to the family. Hi, James. Watch every episode for 4 years. Thank you so much. My pleasure. What do you think of Josh Mann, the guy on X in November who predicted Bitcoin would hit 84,000 exactly on the 14th of March close, and it actually happened to the dollar? Wild. He also says 444,000 Bitcoin by the end of the bull run. I told on this guy and how either he was lucky or a genius. And this is interesting because what's interesting about this fellow, and I heard a lot about this, a lot of excitement, he knows his stuff. This is Josh. Josh is somebody who understands markets, has a very strong background in kind of trading. I can't remember the firms he worked for, but some of the top-notch firms on Wall Street. So he knows markets and he knows Bitcoin and is fascinated by it. But what's really interesting, more to the point, is his thoughts on what happened. Oh, here is his background. I forgot I put it in. He worked at Salomon Brothers. And again, what's most interesting is not only nailing his 84,000, becoming the base, the support level that, you know, as Kathy Wood always says, the longer you have a base, the more you get a spring upwards. And he nailed the date and the price, which is very difficult to nail both. Anybody can nail any price because of volatility, but nailing both was very, very special. But even more special is the $444,000 price target, which is a weird number in Chinese culture. That's bad luck, and this is interesting. Now, the reason he believes we're going to go so high is more of the story that I'm most interested in, not predicting a price in March 14th of 84K, but really predicting the future. And we have spoken a little bit about the fourth turning already on the channel. And this is where it gets super, super interesting. 42 Macro, when he was on the show, we spoke about this as well. And there are many Wall Street legends who actually firmly believe in this stuff in a big way. I just completely killed everything. Let me see. Yeah, I got stuff popping all over the screens here right now. But this one, let's get into it. First of all, what's going to happen with the so-called fourth turning? And why do we care? Same reason we Bitcoin. First of all, he believes there will be a massive erosion of trust in traditional systems, whether that be governments, banks, fiat currencies, etc. But it'll be way more intense than the 2008 financial crisis. And he believes this could really, really turn sideways. Also, we know all about currency debasement and inflation. The longer we go through this, the more people realize the world of hurt we are actually in right now in terms of currency debasement. Even a currency that understands how bad off we are, like a country that understands how bad off we are, like the United States, who are trying to solve problems, and they understand the debt spiral and there's no good outcome. More and more people realize this, and they will be investing in things that are hard, like Bitcoin. Also, we have a huge amount of geopolitical instability, and that'll drive a lot of capital flight. When people have to escape regimes, we have terrible things happening in places like South Africa right now. and all over the world, across different parts of Europe too, when you need to escape things like domestic strife, civil war, trade wars, sanctions, wars, etc., Bitcoin will become the choice, not bricks of gold. Let that be very clear. Also, technology, the fact that you can transfer billions for $1 in seconds, well, 10 minutes, is a big feature, and technology adoption will help support Bitcoin too. And finally, the fourth turning will result in a new social order, and everybody will want stuff that is trustless, decentralized in a big way. For a long time, people just trusted government and centralized authority. That's all going away. Mankind has been betrayed time and time again, and there will be a societal shift towards this. And I think, what is the most decentralized asset on the planet? Answer in a comment below. I think you know the answer. Anyway, I think that's very exciting. But there's other stuff going on behind the scenes. I know 444,000 sounds a bit crazy, but then the US government is now led by people that really, really know their stuff. This is from Howard Lutnick, who is a top man in the cabinet of the US right now, big Bitcoiner. And shout out to Luke Broyles as well on Howard Lutnick, and shout out to Sanjay as well, that sent this to me literally right before I went live, but I had to include it. But Howard Lutnick came out and said, I want to make the USA kind of cut $2 trillion. He owns $1 billion of MicroStrategy, $200 million of Bitcoin that will become billions. Okay. And I have authority from the president of the United States to buy Bitcoin in a budget neutral fashion after he sold 5 billion of gold cards. Okay. Gold cards means the US is now selling visas to come to the US for money. And they just made 5 billion. So they're going to take all these new revenue resources, whether it's tariffs or other stuff like that, and pump it into Bitcoin. And then step one, to recap, cut 1 trillion, sell hundreds of billions of dollars of gold, buy 300 billion. It's very specific about the number. I like specificity. And also force Bitcoin price up 10x and get Trump's successors elected, etc. Blah, 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 blah. Anyway, he is someone in the know, someone with authority. He knows money. He knows markets. Former head of Cantor Fitzgerald. There couldn't be better people in power right now, at least for us, because we care about Bitcoin. So again, it all ties into this whole fourth turning, the whole John Mann forecast, and we'll see where it goes. But what's crazy to me is people are so down and downbeat on Bitcoin, and I've never seen a setup like this before in my life. Anyway, moving on to the next question. Thank you for your question as well. Andrew, I think it was. Andrew MS16, thank you for the great question. I believe in all this stuff, and nothing happens by coincidence. Next question is from Cyberama. I am laying the groundwork for taking profits on Solana MicroStrategy later this year, but I have a question about the practicalities of moving cash. Without undermining your own security, can you give us your view on how best to hold cash? For example, when taking profits in crypto, do you tend to hold profits in stablecoins, or do you prefer to off-ramp funds and hold them in your traditional bank account? For stocks, would you feel comfortable holding profits in USD in a brokerage platform, or is it better to withdraw them to a bank account and wait? So to me, it seems there is a risk in every direction. Stablecoins can depeg at a moment's notice, at least in the UK. Banks are very restrictive about how much you can transfer to crypto exchange, etc. This is a key point because you're in a place where there's a lot of restrictions. I don't quite have that problem where I am. I work with banks that are, of course, friendly to crypto on-ramps where I can move things at the drop of a hat. And that speed is very, very important in the markets. You need to have your financial operations buttoned up. So not only, first and foremost, everything is secure and safe, but second of all, be in a position to mobilize instantaneously if like, for example, something crazy happened in the world, Bitcoin drops to $60,000, you want to be able to buy it. Just press a button, buy, move money, have it reflect instantaneously, and deploy quick. So that's very important. But for me, personally, I keep cash at banks because it's safe for me. I don't keep cash in stablecoins. I don't keep cash in hot wallets. I don't keep cash or anything on Coinbase because I'm paranoid. And regarding brokerage firms, I have some cash there, but I have most of my money in margin, not cash, but I can leverage existing assets to buy more if I need to. So if the opportunity presents itself, I can deploy, and the margin balance is far more than my cash balance. So that's just me. But if you're in the UK and you have a bank that will prevent you from mobilizing your money to buy crypto, get away from it. Find something else. Find something secure. Thank you so much, Doc Intern, as well, for coming. So that's just me and cash. A lot of questions about money and cash. And this one is also related from General Mustard 45. Is it risky to consolidate brokerage accounts? I am about 50-50 Robinhood and Fidelity. I love Robinhood app interface along with 24-hour market access and ability to trade crypto with ease. Fidelity app is sometimes painful to use, very slow to load, and harder to navigate. With Robinhood Gold as well, I could transfer my Fidelity assets and get a 2% match. And with that money from the match, I could increase my Tesla shares by about 2%. Am I still working towards the goal of getting to 300 shares? Good job. Is this a stepping in front of a steamroller to pick up penny situation? What are the risks? So it is good. You hit on so much stuff there, and I'm glad you're aware of these issues. Hey, Dirk, and you're dead right about Fidelity. So let's talk about this. Fidelity is a pain. I have an account, but I use it just to park things like Tesla shares that I have for a long time. And that's it. I would never use it to trade options or scalp or pair trade because it's too slow. The interface, I swear, hasn't changed since the 90s. It's just horrific. But the time it takes to get notification that you got to fill when you got to move fast and every penny counts, it's horrible. Now, I love Robinhood. And I also did a 3% transfer match myself. And I got two Robinhood accounts. I use one exclusively to pair trade, and it's been a gift. I spent 6 months of my life actively pair trading between just two assets to build the rotation model. And that was it. It's been great. Trades are flawless. You get really good fills and great for pair trading. So I like Robinhood. But Fidelity is not going anywhere. And not to be alarmist either, there's a couple of things that when you look at the financials of Robinhood, it has a thing called an Altman Z-score of 1.63, which is considered by some to be in a distress zone. But when I looked at the financials, it's got, 37 billion in assets, 5.8 billion in cash, against 28 billion in total liabilities, mostly customer payables. It seems kind of fine. Sometimes the financial ratios can be a little bit off, but at the same time, it's definitely not as secure as Fidelity, but as you see. Also, there's another factor to be aware of too, and I don't know how this will shake out with the new SEC that's out there, but there is a thing called pay for, what's it called again? Pay for order flow, and the SEC has been investigating them in the past. I think at one stage last year, 60 to 70% of their revenue was made from pay for order flow. So basically, they work with big market makers. They see where people are buying so they can trade against them. I don't like that, but then again, I do my own thing, so I don't care if people use my information. But we'll see. So there's a couple of little teeny red flags to be aware of, but at the same time, it doesn't bother me. I wouldn't keep all your eggs in one basket. And also sometimes I can't remember if Robinhood is FDIC insured. I'm not sure. But anyway, keep an eye out there and be careful. So I do spread my stuff around as well across multiple brokerages and exchanges. Hope that helps. Next question is from, let me get the name. It's from Senna, Ayrton Senna. Make sure we can see the name. Must be Brazilian. Cool. Love that. Hello, James. Was hoping to get your view on getting started with my investing journey at 18 years of age. Woohoo. I love it when young people invest. Currently 100% cash, and I'm quite unsure whether the market is at a good level or if I should wait for the next bear market to deploy. Thank you. So there's so much to cover here. First of all, let's talk about bear markets. My view, from watching the channel, there's always a bear market happening somewhere. There's always a bull market happening somewhere. The Bitcoin, the crypto bull market, bear market versus traditional stocks are not in sync. They operate differently. So that's the first thing. Second of all, Ki Young-ju made a tweet post the other day, which I covered in a video, and he believes the Bitcoin bull cycle is over, expecting 6 to 12 months of bearishness or sideways price action. Again, it doesn't mean bull market's over, but it's different. As I've also said for a long time, the impact of the halving is less and less because it gets smaller and smaller. What drives Bitcoin is money flow. Now, if the US government starts buying Bitcoin, as per Howard Lutnick, we are off to the races, ladies and gentlemen. Now, in other things, you're young. I would, and I know people will groan, I would buy, and I have been buying in the low 200s, the number one AGI, artificial general intelligence play on the planet. Crypto, there's a couple of things that can still be done there. What do you think will double, etc.? I think you're so young. Dabble in the market, keep a lot of cash, keep 30 to 50% cash right now, but start getting your feet wet, testing a couple of things, learn how to trade, learn how to do research, learn how to deploy, maybe take some profits. And I do believe he could be right. We could chop solidate sideways for 6 months, but not if the game theory kicks in like I believe it will. Therefore, he could be wrong. There's still a lot of bullish people out there. But from the data he looks at, pure on-chain data, yeah, Bitcoin is a ghost town. But that's changing. ETFs have bought big the last 6 days in a row. So not so much of a ghost town anymore. Thank you, Dirk. Good to see you. So start getting your feet wet out there. Next question is from Rena. This one is more involved with a cute picture of a cat. Watching Daily Show since 2021. This is my first question on Q&A. Cut it shorter from the last week. I did read it last week. It was way too long. But thank you for being persistent. I admire that, by the way. And I do read all the questions. Due to health issues, I had to quit my job as a digital artist a few years ago. I used to draw, paint, and create artsy things with my hands since I was a child. Given my situation, I can spend minimal time typing. Using a mouse pen is hard on my wrists, but I can look at charts often and watch tutorials. And is it a good idea to learn trading? And while trying to keep it low effort and possibly narrow it to one formula only, I think I may be learning pair trading for Solana Long Short 2x, 3x using PTOS or IADSS, focused on the optimized trend to take advantage also on the bear. Would that be hard to learn from scratch? I'm used to some swing trading, very basic on TA. And in my country, in Eastern Europe, the taxes for crypto are at 10%. Should I take advantage of that? Learning so much from you, James, just by listening and learning patterns. Thank you so much. And thank you so much, Rena, for being persistent. You are a trooper and asking the question twice. Last week it was way too long. Shorter questions are better. And this is special to me because, first of all, I hope things get better. Sorry you had to quit your job. But being an artist is great because you have an ability to have a visual pattern recognition skills, which are so important for technical trading as well. You mentioned a couple of things as well, like pair trading on steroids. You mentioned the optimized trend. You really get familiar with that. You also are thinking the right way about playing the market up and down, especially as we're in this chop consolidation period for now. Playing both sides of the trade is very powerful. And hang out on discourse as well and watch what people are doing with PTOS. It's absolutely mind-boggling. So that's the first thing. And regarding IADSS, that's that works really well for scalping, day trading, swing trading, like up to like 4-hour charts, etc., swinging across 6 to 12-week periods. That works really well with all the signals you need. I think you should focus, because you're new, on one thing first. So I put together kind of a couple of pointers and a little game plan for you. Again, your artistic skills are great because you can recognize patterns. Like one of the things that I do very well is remember numbers and recognize patterns. So you have that in your tool set, which is very, very important. Also, swing trading knowledge, very important. And you're eager to learn, you're persistent, and that's a huge part, is the ability to wake up and focus on something and build a new occupation. And this could be it. You've got all the key ingredients. European taxes to 10% are massive. I can't tell you how jealous I am. If I was in a very low tax regime, my whole approach to trading would be completely different, and I would just live in something like PTOS. But that's a game changer for you. It means you can play more, be very active, and not lose too much in taxes, which is awesome. Now, what I would do if I were you, a little custom trading path, a couple of ideas for the next 4 months. Maybe focus on paper trading a little bit with say Sol 2x, 3x up and down. Remember, it runs in this very tight channel up and down. Play the range and concentrate on paper trading, not real money, recording your results, finding your rhythm, whether it's on a chart or a time frame like a 1 hour or 4 hour or 5 minute, and dial that in. Then for the next, say, 4 to 8 months from now, do it for real with small dollars. Again, find your rhythm. You need to be able to win 80% of the time, but maybe 70% will work because your taxes are low. Think about that. And then eventually in 2026, if you really enjoy PTOS, expand your horizon, learn a new tool like IADSS, and then document your journey. Write everything down. Have a science notebook by your desk. Write everything you see, read, learn across all the assets, do your research, and then find your method and repeat it over and over and over again. That was me with covered calls in the 90s. Just a couple of stocks, like range price $10 to $20. I had no money, and I had to build up a bank, was successful, found my rhythm, and then wash, rinse, repeat, and bought real estate investments with the proceeds, and did that for years and years. And that's my journey. But again, my focus was focus and hard work. Still is today, even though I'm retired. Anyway, hope that helps with your little plan. But really document everything, Rena, and check out people in the community that do this. We have one legendary lady that actually has events every single week that you can join. Ask Me Anything events, and you know her in the community. I won't share her name in public, but people will know. And she is incredible. And she writes everything down in notebooks, everything. And that's how you learn. Okay, next question is from Haas Subs. Hi, James, we're wondering, do you see Tesla robots or any advanced robotics fully stepping into the roles like childcare, medicine, or aged care? I'm in software sales right now, and I can't shake this worry that my job might be obsolete within 5 years. It's got me thinking, what industries do you reckon will stay untouchable as this next wave of automation reshapes the labor market? Curious for your take. This is great. I get these questions literally every single week, and they're so important. And I'm glad people are thinking 5 years out, because that's critical. Now, let's get into the first part, which is pretty easy. Robot roles. What are robots going to be doing for us in the future? And I do believe childcare, like one of the things I'm very excited for, is robots could be brilliant teachers. Absolutely fantastic. They can they can survey your child, understand your child's strengths and weaknesses, and you can monitor the robot as well. But I guarantee you the robot will not do anything scary like some other. Anyway, not going to go down that path. But teaching, babysitting, entertaining will be incredible. And that's coming real soon. Real soon. I mean, Tesla's going to make 5,000 of them this year, 50,000 at least next year. They're going to be everywhere. So be ready for that. It's not 10 years out, 5 years out. It's coming. Also, medicine. I mean, surgery is already done by robots. It's done remotely by robots. But I think the real interesting thing is I go back to like things like emergency room situations where patients need to be triaged fast. I think robots could be very powerful in assessing issues with patients, determining exactly what's wrong. Of course, you can't replace a human doctor, but you could augment how the human doctor operates, especially around complex decision-making, weighing things like patient history, looking at records, ethics, rare symptoms, drugs they're taking, or whatever else. And that could be huge. And then aged care. This is already happening in Japan. Robier is used to lift elderly patients and other things, when it comes to bathing, feeding, mobility, dementia, companionship. It's already here, but it's going to get a lot better real soon. So in terms of those roles, that's happening. In terms of what's good and bad about your future. So software sales, I think lead generation, if you're on that side of it, it's probably already mostly gone, and that will be fully automated. But the good news is complex sales, for example, if you're in software, enterprise software with very complex requirements that require understanding the customer need, the customer pain, the existing customer technology and infrastructure, and having a personal touch, to convince the CTO or the CFO or whoever's making the decision, that is not going away. That will not be done by robots or AI. That will be done by you. So position yourself around complex sales, enterprise sales, understand enterprise software, understand competing technologies, and how whoever you work for has a leg up. Understand how to work with very good sales engineers to configure very custom bespoke demos, and then you'll be golden. That's really, really important as we go forward. And as I mentioned before, I do have family in town, so I'm kind of tied up. But this week we donated to Black Pine Med Animal Sanctuary to support the care of Cody, a white-nosed Coatimundi, which is really cool. And Cody loves squeaky toys and snuggling in thick blankets and stuff like that. That is kind of the story today. DCA will be live tomorrow, and I'll be back in the normal swing of things tomorrow. I want to thank everybody for being here too. Team Details and Sean Donnelly and Cody Lovey and K8 and everybody else. Thank you for being here. A short one today. Got to get back to stuff, but I hope you learned something new. The fourth turning in Bitcoin could be both terrifying and exciting, and we'll see exactly what the US government gets up to. Thank you all for coming, everybody. Have a good weekend. Enjoy the weather. It's sunny where I am, and take care, my friends. Good night.